Infosys is the top gain on the Nifty and leads the sector higher as it announces that its board will mull a buyback on the 11th of September. Remember, Infosys last conducted a buyback worth around 9,300 crore rupees in 2022.
Morgan Stanley upgrades Aditya Birla Fashion to an overweight rating with a target of 113 rupees per share on improving fundamentals and a potential valuation re-rating. Brokerage is also overweight on Aditya Birla Lifestyle with a target of 175, expecting return ratios to improve. Both stocks higher.
Railtel trades with gains after the company wins multiple orders worth around 700 crore rupees from the BR Education Project Council.
And Prime Focus extends its rally, locked in another 10% upper circuit after Kraft EM Fund acquires nearly 4% stake in the company. The stock has now surged 30% in just the last 3 sessions.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and to the top of the screen, well, the indices are mostly in the green, barring the Nifty Bank. That's lost its way a little bit, and that's down closer to 200 points. So, Mangalam, you have the two pillars of the market. One's in fine form just for today. That is the Nifty IT index, and is finding its form. But the banks, yet again, slipping 200 points from the high point of the day. It needs to get its act together. Otherwise, you can't have such a large constituent continue to underperform.
Take that point entirely, Nigel. And what's interesting today is that the advanced decline also is far more in favor of declines than what it was yesterday. In yesterday's trading session, we had a 2:1. Now the split is between 1:1 itself. Those lines are coming fairly close. The other interesting thing is that yesterday's high on the Nifty was 24,885. Today's high on the Nifty so far, 24,879. So as we move towards levels of 24,900, closer to that level, there is some sort of supply that creeps in, irrespective of, the upside booster. So let's see how the second half pans out today. We have the weekly options expiry as well. But we do have Somil Mehta of Mirae Asset joining in for a quick technical check on the market. Somil, good news after good news, but we still see selling at highs. When do you think the Nifty breaks out of the range? What is it chartically that would, give you a sense that, okay, it's now ready to move big in either direction?
At this point of time, I don't think so there's any direction or any trigger left for Nifty to just break out of this range. We've been stuck in this range for like probably 3-4 months already, around 25,000. The range is very obvious. 25,000 is the higher end, 24,500 is the lower end. I'm not expecting markets to go down below 24,250 levels, which is close to 200 daily exponential moving average, and that will be a very crucial level to watch out for on the downside. However, I think this range will break out on the upside, maybe in the medium term outlook. In the very short term, we still see range-bound movement in Nifty, and the targets on the upside would be 25,500, 25,750. So these are my targets in the medium-term outlook. But at this point of time, I think we should more focus on stock-specific and sector-specific action. We've seen autos doing great, metals doing great, and I think IT and railways are picking up now. So I'll be focusing more on sector-specific moves.
Okay, all right. Hi, Somil. Good to see you. Somil, it reminds me of the Indian team in the 1990s, right? Everyone could bat, from around 4 till around 10 and put in some runs. But the team did well when Sachin, batted well. And Sachin, I would say, is the Nifty Bank. So currently, the Nifty Bank is off form. Becomes very difficult for the Nifty to move higher. On the Nifty Bank, what are the levels you're looking at? The nearest possible technical level is a 20-day MA. That's around 500 points away from here. But what is the range you're looking at? How would you trade it?
At this point of time, the most important thing here is that we have Bank Nifty has made a triple bottom at 200 daily exponential moving average, which is a very, very positive sign last week. 200 daily exponential moving average is at 53,600, and I'm not expecting last week lows to be broken on the downside. I'm expecting a range-bound movement here, and then this range to break on the upside. My targets are 55,200, 55,800 in the very short term, but yes, range-bound movement is expected. I think ICICI is looking great, HDFC is looking great, but they are still very slow to move on the upside.
All right, let's talk about today's cricket team then. You usually speak about the bowling attack now. There's Bumrah and the others. But in absence of Bumrah, you have to have someone like a Siraj who does well. And today, that is the IT pack. We have Infosys, which has moved higher. We had made this point earlier that 1500 call has seen a fair amount of writing. It has the highest open interest. Do you fancy Infosys' chances to actually go past that 1500 mark after the big up move that it's seen already? Or do you think the buyback move is done?
I think the buyback move is already done, and I'm not expecting too much from Infosys at this point of time. Maybe from Emphasis and Coforge, but not from Infosys, because the medium-term outlook still remains negative on the IT side. Short-term, maybe a little bit of movement here, but not much from the large caps.
And what would your impact players be? I mean, individual stocks, you've spoken about the sectors, you've spoken about Nifty, Nifty Bank, Nifty IT and Infosys, but you've laid out some stocks for us today as well.
Absolutely. I have some very, very interesting impact pairs. Chola Finance, from the finance side, it has broken out of a small, a triangle pattern on the upside, and I'm expecting this stock to rally in the medium-term outlook as well. It is trading below 200 daily moving average, but I'll be expecting a good rally here. Stop loss is 1465, and target would be 1620. It can go up much higher. The second call would be Titagarh. This stock has exactly taken support at 20 and 40 daily moving average, going above the consolidation. Great stock to be in for a momentum play. Stop loss would be 838 and target would be 920.
All right, and before we let you go, I'd just like your views on two stocks in particular. One is Ola Electric. A big move is what we saw on the stock earlier. Then there was some profit taking that came by on Friday. Yesterday it opened well. Thereafter, closed relatively flattish. Today as well, it opened lower, but from lows it's seen a near 7-8% recovery. So your view on Ola Electric. And the second one, which is seeing a big surge after underperforming for a while, is Sula. Sula is up 5%. Remember, the stock is halved from its 52-week high. It's been quite an underperformer fundamentally as well. Speaking in terms of numbers, etc. But now there are reports that they may get into other segments too. Sula is up around 1.5%. In fact, 5.5% right now as we speak. So on Sula and Ola, your thoughts?
Ola Electric, definitely very positive on the stock. Even my fundamental desk is a little positive on the stock. I think from here, Ola Electric medium-term outlook technically would be 100. 100 is the level I'm watching for. But in the very short term, it has taken support at 200 daily exponential moving average, which is exactly at 58 levels. And in the short term, the targets would be around 70 and 80. These are the two levels I'm looking for. On the upside, to be very specific, 8.40 is the next swing high. So that would be my target. Sula is looking a little positive in the short term, but I would not bet on the medium term outlook. In the very short term, yes, the targets would be around 307, 308 levels, which is the previous swing high. Stop loss would be around 257, but this is a short term play, not a medium term play. So I'll be still watching out for a close above 325 for a medium term breakout.
All right, Samil, thank you so much for joining in and giving us your views on a bunch of stocks and an extended conversation today. With that, let's get you some more ideas for profit. We have our colleagues from Money Control Pro joining in. Today we have Khushbu Rai Gupta, who has a stock that she's been tracking. Khushbu, what do you have?
In today's idea for profit, we have Aptus Value Housing. The low-cost housing finance company is an established player in South India and targets first-time home buyers in remote areas. The market-leading position of Aptus offers good pricing power and higher yield, which helps the company to protect margins and offer best-in-class return on asset. If we look at the recent earnings performance, the profitability growth during the quarter was driven by healthy growth in the asset base supported by branch expansion. The home loan segment also saw strong disbursement trend, while the asset quality remained largely stable, led by improvement in the collection efficiency. Although the spread saw slight decline, the management expect them to remain at the current levels. Aptus loan book is slightly riskier, and hence the asset quality needs continuous monitoring, and hence we believe that Aptus Value is a promising stock for high risk investors at the current valuation.
All right, we take that point. Thanks a lot, Khushbu, for that. Meanwhile, just before we slip into a short break, pull up Titagarh Rail Systems. That stock too has spiked up around 3.5%. Somil was just speaking about the rail stocks gaining some traction. RailTel is higher because of the order win that has come by. But Titagarh Rail Systems is the one which is up around 3.5%. Take a short break, come back, get you more on a lot of stocks that are moving around and also the markets at large. Welcome back. Amber Ent was an underperformer in yesterday's trading session, value unlocking in one of their material subsidiaries, but now from lows it's seen a bit of an improvement, marginally in the green. And PG Electroplast is the other one, which after having a very forgettable previous series is now marginally in the green, up around 0.4%. We do have a bunch of stocks which are on our radar, none moving as hard as Mobikwik. Hormaz joins in. Hormaz, it's been a big move.
Big move indeed, and after that big move, we are seeing some bit of profit taking at higher levels for Mobikwik in today's session. But the one trend that remains common is the fact that after the 1st of September, we have had almost 1 crore shares plus trade every single day for Mobikwik, and that seems to be continuing in today's session as well, because we have already had more than 80 lakh shares that have already changed hands in today's session. That is well above the 20-day average, of which is around 45 lakh shares at this time of the day. So already moving on high volumes on the downside as well is Mobikwik. And when it comes to delivery volumes as well, even in yesterday's session, we had almost close to 5.5 crore shares that had changed hands, and courtesy of this heightened trading activity since the start of September, more particularly so after the Abu Dhabi Investment Authority exited the stock on the 2nd of September. Since then, the stock has continued to move on either side in very high direction, more so towards the upside. And the 20-day average volume as well now has gone up to to almost 1 crore shares now. Even in yesterday's session, close to 40 lakh shares were marked for delivery in comparison to the 20-day average of around 12 lakh shares. And even yesterday, which had very extremely high turnovers as well, close to 1800 crore rupees, which is almost 70% of Mobikwik's market cap as of yesterday's close, which stood at around 2500 crores. Despite this 50% move that the stock had seen in the last 6 sessions before today, the stock does move above its IPO price, is around 15 to 16%, but from its post-listing high, which is close to 700 rupees, the stock is still down well over 50%.
Okay, all right, Hormaz, thanks a lot for that. Well, let's hop across to Nimesh. He's here to tell us the standard brokerage report that he picked up for today. Nimesh?
Hi, Manglam. So, hi, Nigel. So, today's standard was on Aditya Birla Fashion and Aditya Birla, so ABFRL and Aditya Birla Lifestyle. Morgan Stanley has today upgraded ABFRL to an overweight with a target price of 113. They believe that ABFR is at the cusp of improving fundamentals, largely led by profitability, as well as they see a valuation re-rating for the company going forward. ABFR is a good play on the luxury brand, and they expect a 14% revenue and a 27% EBITDA CAGR for FY27 and FY28, and at 10 times EV/EBITDA on FY27 estimate. They believe the risk reward is favorable. So that's an overweight call on ABFRL. They've also initiated a coverage on Aditya Birla Lifestyle brand, which is a demerged entity from ABFRL, and they have a target price on that stock at 175. For Aditya Birla Lifestyle, Morgan Stanley believe it's a good mix of a good core lifestyle brands as well as the young brands, and that can be actually a bit of a game changer in terms of earnings for this company going forward. They expect a revenue CAGR of 10% for FY27, FY28 estimate. And the stock is currently valuing at close to 13 times on FY27 EV/EBITDA. So even there, the valuation is attractive, and hence an initiating coverage. So basically, a coverage in both these stocks, an upgrade on ABFRL, and an initiating coverage on Aditya Birla Lifestyle.
Wonderful. Both stocks higher, Nimesh. Thank you so much for that. In fact, consumption stocks, the discretionary stocks are fairly well bid in today's trading session. So just pull up something like a Metro Brands, that's up around 4%. We're seeing some traction in names like, Sheila Foams as well. That's the one which is up around 4%. And we have United Spirits, which too has moved higher at the high point of trade for that stock. Take a short break, come back, get you more on the markets and a lot of stock-specific action.
Welcome back. Well, we're focused on the equity markets till now, but let's take a break from that and let's focus on the money markets. The rupee, remember, earlier today opened stronger, but that's quickly given away some of those gains. Lata joins us to help us understand what's going on in the money market space. Lata?
Well, after a long while, if you were a rupee bull, there was a bit of a cheer early morning when the dollar cost less than 88 rupees. It went rather quickly to 87, 94, 93 levels. But it was only briefly over there. The reason for that is quite obviously only the dollar weakness. The dollar has weakened considerably in the last 24 hours, as it has been doing all of this year. It's because of the expectations of a Fed rate cut. There were also some problems in Indonesia with the financial minister getting fired and people expecting, therefore, that FPI is buying Indonesian bonds will now buy India bonds. And all that led to that kind of positivity we saw in the rupee, but it was very brief, a very brief moment under the sun. At around 87.90 levels, you just saw PSU banks come and buy the dollar heavily, mostly for importers. Importers probably stayed back on Friday because of the huge FPI buying. And the moment they saw some kind of, cheaper dollar, you saw them rush in, mostly oil importers perhaps, but importers of all hues. And therefore, the rupee remains the weakest currency in Asia. I'll just give you a measure. The dollar is actually weak 10% this year, if you count from January to now. Remember, it was 106, the dollar index, now at 96. It's a 10% fall. And you have seen gains across, the Thai baht, Korean won rising 7%, each of them. Even the Chinese yuan is up about 2.5%, 3%. The yen is up about 6% versus the dollar. The rupee is still weak 2.5% versus the dollar, despite the dollar falling 10%. And that's largely because of this relentless tweets that you're getting, the fears in the market of, services tariffs or, other kinds of bad mouthing from other quarters. Unless those series of, negative tweets or negative statements stop, it's very difficult to see the rupee recover much. People are looking at 87.90 to 88.30 now. Correctly speaking, 87.50 should come very quickly, even if there is a bit of positivity on the tariff front.
All right, Lata, thanks a lot for that. We'll definitely monitor the happenings in the rupee space, currently closer to that 88 mark itself. But a lot of that Lata spoke about was related to the US macros, the US dollar itself. The United States added just 22,000 jobs in August, which was dramatically lower than expectations of 76,500. The unemployment rate too rose to around 4.3%, which is the highest level that we saw all the way since 2021. This bolsters the case for a rate cut when the Fed meets later this month. In fact, let's listen into what economists and market experts had to say about this and the impact that they have on the Fed's rate path outlook.
I think that the weak jobs report that we got, which sort of confirmed August's weakness, really shows that the labor market has lost some momentum. It's not falling off a cliff, but it certainly has weakened over time. And even though, there's reasons to believe that immigration is affecting the supply side, we're not getting as many jobs per month as needed to keep the unemployment rate constant. We saw an uptick in that unemployment rate. Again, not a crashing labor market, but certainly one that has lost some of that positive momentum. So if I were in the room, I would say, let's move ahead with a 25 basis point cut in September. We still have some more data on inflation, but we know that inflation is going to be moving up because of the tariff.
In the past, when the Fed has cut interest rates, when the economy has been doing okay, it has usually been a recipe for a bubble. That's what happened in 99, 2000. And some will argue that that's what, possibly even happened in 2021. But I think the main issue here is the fact that financial conditions are super easy. The Fed has never cut interest rates when financial conditions have been this easy. But there's no evidence, that's the point I make, that the monetary policy is being restrictive. We don't know what the neutral rate is given how fiscal policy is. The fact that you're running a fiscal deficit today of 6.5% of GDP, that's very stimulative as far as the economy is concerned. We don't know what the neutral rate really is, because the fact of the matter is that if the Fed funds rate is 4.5%, the nominal GDP growth is still well above that at 5 to 6%. So I don't see any evidence of how monetary policy is being restrictive. I had some sympathy with the argument that the Fed does need reform. that this whole idea that the Fed has done such a fantastic job for the last 20, 30 years and the Fed should be left alone. No, I do feel the Fed should be held accountable for its mistakes. But in my book, those mistakes have had to do with easy money, not to do with the fact that the Fed is being pushed now into cutting interest rates more. Even without pressure from the Trump, the Fed's been far too dovish, has been my argument. And it's the real reform that the Fed needs is to deal with its mission creep, something that Secretary Scott Bessent also spoke about in a recent piece. But I'm really surprised by how many people on Team Trump have now flip-flopped, that they used to criticize the Fed for being too easy, for stoking financial market bubbles, for promoting wealth inequality with their easy money policies. And here they are with the economy, they claim, doing just fine, and yet they're calling for lower interest rates and pretty aggressive rate cuts.
All right, with that, we have come to a close on this edition of Chartbusters with the news that barring IT, no other sector is contributing on the way up for the frontline index. Infosys obviously at the high point of trade, but we are seeing some catch-up come by on Wipro as well, which is up around 2.8%. Take your leave, and on the other side, we have the team of Trading Art take all the market action forward. Thank you for watching.